Hello, fellow traders. 'Tis I, the Rumpled One. It is Thursday, September the 3rd, the year's 2020. Let's talk trading. Seeing Dots, Part 2 with Walmal. Before we get into the video, I just want you to know, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of a accredited financial professional. I think I'm getting pretty good at that. Maybe I've got a new career ahead of me.
Maybe you can become an auctioneer.
That's a whole different thing. Anyway, let's see. A couple of days ago, we were talking about seeing dots, and I guess a few traders had some questions, and a few people have actually adopted that style of trading. Normally, we usually trade the dots on M5, but today we're going to take a quick look at M1 because I had also mentioned I think, in one of those, in the video about coming back from a loss, we talked about stacking bricks. So, and Walmal and I were just having a discussion. So I'll let you tell the boys and girls and non-binary traders about what we just talked about.
Yeah, the idea that, sometimes the market just does some things that may be a little bit unusual, a little bit different than what it normally does. And one of the things that I started seeing today a lot was that the market would go up, you'd have your line on your chart, whether it's breaking of the previous H1 line or breaking a sweet spot line, and what was happening was it would break it and then it would just it'd fall off of it, and fall off pretty quick. So I got into this mode today. I took a couple of losses, but I'm up for the day, which is great. Made my call for the day, which is fine. But what I was noticing, I had to go and change the way it was the trading. That wasn't breaking my trading plan, so please don't take that. But it was more of I had to go and trade what I see. And one of the things I was seeing was the market would go and break one of those lines and break it by somewhere between 3 and 5 pips, and then immediately fall away from it. And if you didn't take what the market gave you right away, you could go and you could wind up getting out either with just a small profit or maybe even a loss, a little bit of a loss. And so you had to be very, very careful. Now, this idea of trading the dots, you have the M1 up, I assume.
Yeah.
And if you look at that, you got a 3 ball at the top, so that's a nice reversal telling you, hey, this thing's going to go down possibly, and so you wait for the break of the low of that candle, and you're underneath that dot, and so you look at that, and I'm under the dot, I'm breaking the low, there's a good chance, and so we go and follow that, and now we've gone 1, 2, 3. 4 candles past that, and if you notice, every single one of those candles, has closed below the dot. And that's a good indication to stay in the trade. Now, sometimes it's hard. I'll admit it's very, very hard to do it. Psychologically, it's very hard because I see that thing going against me. Hey, I've made 5 pips, and now it's taking 3 back. It's taking 4 back. I got to stick. I got to wait for the close, and it's hard to do.
Yeah, because let me just, I'm going to have to... when I first called Walmall this morning, he goes, right now, I'm in a loss. I was a dummy. I took the first break of the line at the 70. And so he came all the way back down, and he almost got out of the trade. He stuck in it, and then you see this where it popped up 5 pips, and he nailed it at the top.
Yeah, and that's the thing. Sometimes you can get away with that and do that. But I hadn't broken my trading plan because my trading plan said that because it never went positive for me by 3 pips, that means my loss is at 7 pips. So I didn't break my trading plan. I think I actually got this, when I measured, I think I actually had 6.8 is where I got to. So I came real close to it, but I didn't, and I didn't break it. But this idea of, staying with the dots. Once it started to go back up, and it was very nice watching it. It was every close was above mid dot, so but the thing is, I also knew what the pattern for the day was, and it's sort of like, okay, I'm up 5, I'm out of here. I'm just going to take my profit off the table.
Yeah, so like right here, we had a close below the mid dot and then an open above the mid dot, but you see prices just reversed. And it reversed across that 80 line. This is when you just start taking profit.
Yeah, just take it off the table. start thinking about taking it off. Now, the only thing is that it did not. This current candle didn't close below the mid-dot, mainly because the candle's not closed yet. So it still could go down, but practically, it's sort of like, I'm up right now from the entry point. I would be up 8 pips. You know what? I think it's probably a good time to start exiting out.
Well, technically, I was going to say technically you should be long because it was a DSR trade on the one if you were trading DSRs because you had a 3-ball at the for me I guess it wasn't because it didn't open, that second candle didn't open above the mid dot. So now I have to correct myself. That really wasn't long.
And the other thing too is that I know you like to trade off the 1 ball on the 1 minute sometimes. I never do that. So I just count the 1 ball on the 1 minute. That's just me and the way I do it. And you do it slightly different than I do it. And and
you mean on the 5 minute? You only
on the 5 minute.
Right.
Right. Yeah, I only look at it on the 5 minute. So, and if I look on a 1 minute, I only want to trade off a 3 ball. Sometimes a 2 ball, but usually just 3 ball. But in any case, if you look at that last candle on the 1 minute chart, it did go and close above it. So, you know what? We're out of here. We're done. You could have, if you got out of the maximum place, you could have gotten out with 12 pips, but getting out with 8.4 pips, that's not too shabby.
Yeah, if you catch 60% of the run, you got the lion's share. And even if you stuck in that trade, and that when that next candle opened and it popped down, you could have picked up another, pip or 2 possibly.
Yep. Yeah. But now if you notice, look, it's starting to go up now. So it's sort of like that run may be over, maybe it's not over, but we may just be in a dip. I don't know.
Yeah.
We won't know until the next candle closes.
Yeah.
But take your profit off the table while you can.
Yeah, and so I'll wrap myself out. After Walmal did his trade, I saw the price come back down, and then it came back and hit the 70. I jumped in, and it went up, but not enough to give me profit. Then I rode it all the way down to this 3-ball on the bottom. Then it came back up, and you see how price spiked up and came down? I jumped out on this candle because I have one of my rules is if I'm in a trade for 3 minutes or more and, I never had a chance to take profit, once I get a chance to take profit, I'm out. But like I said, I kicked myself only because it was still above the dot. Even when it closed, I could have taken, like 0.5 pips. The next candle moved up and you see what happened since then.
Yeah, but here's the real question. Did you trade your plan?
Yeah, exactly.
Okay. Yep, that's right. You traded your plan, and that's the most important thing. You traded your plan. So that, because the thing is, you may have only picked up, a less than a pip, but just as easily, and you have that rule in place because your experience and seeing it when you're in that long, you have a higher potential of loss. So, knowing that statistically, hey, you do that. That's why you do it. That's why you trade your plan.
Yeah, and
you trade your plan so you have it in your favor.
Yeah, so once again, you can see here if you would have taken that short and you only took say 8 pips or even 5 pips, you see the markets would have taken it all back just about right now. It's right back to the entry point.
Yep. And again, it's those. But if you look at those mid dots, look how powerful they are. I mean, it's just every time it closed below the mid dot, and as soon as you get close to, you got to close above it. Bam! You're out of there. You got to be out of there. Because that's what it's going to do. From that first close above the mid dot, you gave back potentially, depending on when you got out, you gave back 8 pips.
Yeah.
So that's a lot of pips to be given back, especially with these type of methods.
Yeah, and so the original way of trading this was like if we start here with the 3-ball at the top, you see price opened below the mid dot. Once this closes and you can see it's going to close below the mid dot, you don't even need the indicator. You can look at your eyes. Is this past the middle of this candle? Yeah. As soon as it opens, you jump in. You don't. There's no thinking about it. It's like playing a video game. As soon as it opens, you jump in, and then you can see here. You just write it down, and it's
Yep.
closed below, closed below. You know, this one closed below, but you see it's off of one ball. And one of the things when I'm scalping, you know, if I saw one ball appear immediately, I would probably been out of the trade. But you can see here, you can see how many candles it's going to take for that one ball to appear. It's going to take at least 5 candles. And so it was crossing all of these other candles, coming back and filling them, coming back the other way. And so when it filled this candle here, it just pretty much filled that run. And that's one of those things. Wait a minute, it filled that run. Now this candle opened below, but it's starting to go up. You could just take your money off the table. And then on this trade, on the next candle, what happened? It opened above the mid dot after a ball on the bottom. Once again, jump in the trade. Okay. Now here, the next candle opened below and closed below. Now, if you were in profit, you may have stayed in the trade. If you were in a, if you, and it never triggered your stop loss. So had you gotten in right here, you still would have been in profit, even though it closed below, and you might take the waiting game. Let's see what happens. Because then the next candle opened above the mid dot. So, okay, you've got that in your favor. So it opened and closed above, open and closed below, open and closed above. Then you can see here, it opened below, got below here, and you could have taken some money off the table. And that's the whole thing.
Yes.
You take some pips off the table. You don't have to get the, you know, a 20 pip run or a 10 pip run every time. You could take 2, 3, 5, as we call it, stacking bricks.
Yeah, and the thing is, the nice thing about this is that from time to time, you will get that, 10, 15, 20 pip run. It happens. And, and I think what it does is it allows you to keep the confidence to stay in the trade because, go back and look at the charts. Put this indicator up on the charts and go back and look. And you'll see that time in and time out, when you get a run, it has to do exactly that. If you're going to get a run in one direction or the other, it's got to consistently be above that mid dot. Very rarely do you get a chop run up. I mean, it can happen, but it just so rarely does it happen. And so using this method can give you the confidence to stay in a trade a little bit longer, and also get you out of a trade, because you know that, hey, I've gotten as much as I'm going to get on this thing, and it looks like it's going to go the other direction. Because that's usually one of the first indications that the whatever direction the market was moving in has come to an end, and it's going to go in reverse off of that.
Yeah, and the mid dot is just halfway between the high and low of the candle. It's nothing really magic. But it just seems to work. And if you have a reasonable goal for the day, somewhere between 5 and 10 pips, you can make it, because we were talking about, I guess you could call it brain management, about the stress of being in a trade. When you're in a trade, it's stressful. You just have to accept that, because especially if you get in a trade and it immediately goes against you, you start to feel it because you got money on the line. You're trying to put food on the table. And there's just no way around it. And you know what happened, Walmal? The fastest 15 minutes of trading is over again. So, fellow traders, we'll talk more about the dots in the future, but as Walmal said, just put the TRO mid dots indicator on your chart and just watch it. You don't even have to trade it, but just watch it and see, and it just might improve your trading just a slight bit. So remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you haven't clicked subscribe, please subscribe. Click like to move these videos up in the YouTube channel there. And so this is the Rumpled One, over and out.